Good evening, everyone. Thanks so much for joining us for tonight's webinar on navigating financial decision making. We're really excited to bring this great group to the community. Before we get started, just a couple things to note. We have set up an email address, fireaid@ourki.org. That's FIREAIDE@OURKI.org. If there's any assistance we can provide in any way, we are happy to help. We've been matching people with resources left and right, so feel free to email us at that if we can help. Also, ourki.org at Pally Fire is our page that has information, resources, and recordings of webinars like these for your viewing pleasure. And then ourki.org/firefund is a way to donate to the KI Community Palisades Fire Assistance Fund. These are direct assistance funds that we are providing to people in the community, and we're really seeing that have an immediate, tangible impact. As far as tonight's session, if you look at the bottom of your screen, you'll see a little button that says Q&A. That is where you go to ask a question to our panel. We're going to answer as many of them as we can. So if you do have a question for any of the folks, that is the way to do that. And with that, I'd like to pass it to Jennifer Gray Thompson, founder and CEO of After the Fire USA, who will be moderating tonight's discussion.
Thank you so much, Adam, and the community for having us once again. It's an honor to be here with you in this really, difficult time in your lives. Very proud tonight to bring you three of the best minds that we know in the areas of insurance, some financial issues, and they're going to answer your questions. I do want to say at the top that we've been in a lot of conversation with the community, and we're hearing a lot of media who's actually saying that somehow this is all going wrong already. We want to reassure you that from our very experienced vantage points, that while it's imperfect, you're actually ahead of schedule at this time. It's going to be a difficult recovery, but it's going to be entirely possible. We're going to be here with you. We actually have a lot of faith in your community. You have a ton of really talented, wonderful people who are committed. And so we just want you to know we will continue to be here with you. And tonight is one demonstration of that. And to really encourage you to sort of slow down as much as you can, and to consider that maybe the media isn't getting it right when they say that this is already somehow a failure or all this doom and gloom. We're not really sure why they're doing that, but we want to assure you that that's not our experience or our observation at all. Co-facilitating with me tonight is Jen Couch, and I'll have her introduce herself.
Yeah, thank you. Hi, everyone. My name is Jen Cowish, and I've been supporting and working with After the Fire since they came into our community in Colorado for the Marshall Fire. We're just past our 3-year mark of our recovery, and I had a smoke damaged home, pretty severe smoke damage, was out for several months and went through the whole remediation process improperly, and then after figuring some things out properly. So I have a lot of experience in what not to do and what to do in a recovery with a smoke damaged home. But I'm also a community organizer in our fire recovery, and then I'm an elected official in the community that came after our fire. I wanted to, keep pushing the focus on the fire recovery, so it made a lot of sense to get into a position where I could keep that front and center. So I can speak to the community side as well as the policy side of things in the recovery. So thanks.
Thank you, Jen. Sidra.
Hello, everyone. My name is Sidra Goldwater. I am with Fannie Mae. And so for folks who may or may not know who Fannie Mae is, we are the largest purchaser of mortgages on the secondary market. So we basically own about 25% of all the single family mortgages in the country. We own about 20% of the mortgages for multifamily units also in the country. And I'm on our disaster recovery and resilience team. So my background is in servicing policy. I wrote most of the requirements related to disaster recovery. So that's everything from how insurance proceeds are distributed. People are often very shocked that their lender is, or their mortgage company is on the insurance check. I always like to remind people that your home is a collateral for your mortgage. And so that's why they're on the check, and why who owns your mortgage matters in terms of they set the rules for how those proceeds are going to be distributed. It's not that they want to keep the money, it's just they want to make sure that it's being applied towards rebuilding. I also have a lot of experience in forbearance and loss mitigation. So the options that are available to you if you choose to take a forbearance, and how you can repay those payments, because forbearance, the payments are not forgiven. You still have to make up those payments, but there are paths for you to get back to current.
Thank you, Sidra. Valerie?
Hi, my name is Valerie Brown. I am a '07 Witch Creek survivor down in San Diego, and I'm previously Deputy Executive Director of United Policyholders, so one of the nonprofits in this space that helps people with insurance advocacy post-disaster. I'm also a member of California VOAD, Vice Chair for that organization, and I am the After the Fires Fellow for Wildfire Resilience.
Thank you, Valerie. Kate?
Hi, I am Kate Bolger. I am with Money Management International. We are a nonprofit financial counseling and HUD certified counseling organization, with the largest in the country in our space. And what we do is help people financially recover after disasters. So we work with folks regardless of where they were, what type of disaster they went through. They're assigned a disaster coach, and that coach basically sticks with them through the recovery, setting goals, helping them achieve them, helping make tough financial decisions, answering basic financial questions. That's Project Porch Light.
And also, Kate, can you talk about your partnership with Fannie Mae really quickly as well?
Yes, absolutely. So Fannie Mae is one of MMI's favorite partners. Fannie Mae supports Project Porch Light through their Here to Help program. So it's available to anyone. So Project Porch Light's available to anyone, but especially to anyone in a Fannie Mae property.
And we know that it can be really, if you are a person who's used to being a doer and not accepting things that are necessarily free services, we just want you to know that this is why is it so important to choose a HUD certified? Why are you actually the preferred place to go?
Yeah, absolutely. So there are a lot of people out there who have a lot of thoughts, a lot of great opinions about money. The difference is the HUD certified counselor, you're talking to somebody who knows their stuff. They've been doing this work for many, many years. They've passed a series of really stringent exams that the Department of Housing and Urban Development require. When they work with MMI, they're somebody who themselves have been through a disaster. They're folks who have been specially trained for this. This is the primary work that they do. They just really work with folks who are working to recover from disasters. And we have a ton of experience in this space. We've been doing this work since 2018. And it is something that has grown and grown. We initially imagined that it would be something that happens sometimes, and then we would sort of have to stand down at other times, and there's just never been a chance to stand down. There's always something going on.
I so appreciate that. I'm not going to just pick on you, Kate, I promise. But but can you just also talk about why they get the same counselor whenever possible?
Yes, yeah. So once somebody once you start talking to a counselor at our organization, we really want you to stick with that same counselor. And there's a lot of reasons for that. The number one, though, is we don't want you to have to retell your story over and over again. That is so difficult when you have to sort of re-explain everything. You're basically starting from scratch over and over again. And that happens so frequently during the recovery process, and unfortunately is just going to happen. There's not a lot we can do about that. But for our side, we can minimize that by having you work with the same person the whole time. It also helps because then that person knows what you've been through, right? Like they know what you've tried, they know what your next steps are. They're not having to make decisions fresh because they're already familiar, they're already really closely acquainted with your case. And they're going to be the ones texting with you and emailing you and talking to you on the phone, right? It's the same person every time. And you really kind of get a great relationship, I think, with your counselor over time. And that helps the process, I think.
Thank you for that, because it's one of the things when we promote your services, it's one of the key pieces that we think is so important, that people know they're not going to be tortured over and over again. I'm just going to get people a little bit familiar, and then we're going to go to questions. Jen's going to ask the questions, but Sidra, because I know what some of the questions are, I just want to make sure that if you can speak to the have a plan before you pay off your mortgage?
Sure. So, one of the things that we like to tell people is, folks want to take immediate actions, and I understand that. And you may be hearing from your servicer, from your lender, that you should pay off your mortgage. And it's going to sound very strange coming from a mortgage company saying, don't do that. I'm not saying that it's not always the right path to pay off your mortgage with the insurance proceeds, but you want to understand what, if you want to rebuild, it may not be the best path towards that. If you use your mortgage proceeds to pay off your mortgage, you're not going to have enough money left to rebuild. It may also jeopardize things like when you're applying for an SBA loan, other assistance programs. So it's, I always like to say, take a step back. Most folks will have additional living expenses, or ALE. That is what, is supposed to be for this period of time when you're out of your home. I mentioned forbearance earlier. Forbearance allows you to basically miss a mortgage payment. The loan will not go to foreclosure. You will not accrue late fees. I'm talking from a Fannie Mae perspective. Most servicers, most lenders follow our requirements because basically they want to treat all homeowners, all borrowers the same. So that is something I would, talk to your servicer, talk to your lender, and explain your situation. It is, they want to understand what your goals are, where you want to go, and so really have that open dialogue with them. The other thing I will share about forbearance is, and this is one of the things that you might want to consider, particularly if you currently are getting ALE, is that it can impact your credit score. I do not know what that impact is. No one does. The credit bureaus are basically like talking to a wall, case laughing, but it is true. And so it's something where, if you can afford to make your mortgage payment, please do. If the only alternatives is going delinquent, then a forbearance is the right solution.
Thank you. I appreciate that. And Valerie, I'm not neglecting you. I'm just going to kick it over to Jen because she does have some questions.
No, go right ahead.
I do. Well, I specifically wanted, actually, I would like to address, there's a question that just came up about someone's escrow company planning to keep the interest. And just so that Governor Newsom actually already has presented a legislation to ensure that mortgage lenders are required to open an account for the homeowner and that the interests go to the homeowner. And so I put the link in for the language for that. That's something that we dealt with in Colorado, and our legislators passed it quite a bit after our fire, but it was one of the things that we learned that people were dealing with. So it's great that Governor Newsom is already in front of that. So some of the other questions, this one, I think maybe several of you can speak to this, but sharing more about the process of forbearance and why it might make sense. I know in our fire, a lot of people didn't even know this was an option. And for people, I can speak for myself, is we didn't take the option, and then we had some financial issues much further down the road. And so if you can speak to the considerations you might want to explore, if that's something would be beneficial to people or not.
Sure. So one of the things with forbearance is that you don't need to take it immediately after the disaster. There is no end date, specific time frame that it's required to. We know, for example, with the Marshall Fire, many people took it when their ALE, those additional living expenses, ran out 2 years later. And they were almost back home, but not quite there. And they needed that little bit of assistance to get them over the hump. Again, it's one of those things where I can't say, broadly that what you should and shouldn't do. Everybody's circumstances are a little bit different. But it isn't a tool out there. When we call it an unresolved hardship, that's like the lingo you might hear if you're Googling stuff. It's when you don't know the answers. And so that is the solution for you, for somebody when they don't know what's next. A lot of people want to jump to a modification, they want to jump to that final solution. And the issue with that is if you don't know when you're going to be back home, you don't know what your payment you can afford. There's all these things you don't know. A forbearance is a solution for when you don't know.
Thank you. A follow-on question. We had this in our community as well, as some lenders weren't responsive. People were asking, they were reaching out online and emails, calling, and they just weren't getting feedback from their lender on whether it was forbearance or just answering, some of the questions that they had about what their options were. And so do you have any advice for people that aren't getting a response in a timely way?
Sure. So a couple of things, and Kate, please jump in, is I think Adam posted to our website, Fannie Mae's Here to Help website. On that website, one of the things that you can find out is if Fannie Mae owns your mortgage. There are a couple ways to look that up. Freddie Mac has a similar tool. And so if one of the GSEs, Fannie or Freddie, owns your mortgage, you can contact us and, we can escalate it that way. So that's, I would say, one thing out there is just to be aware of that. We are in unusual times. And so the other solution I would recommend is reaching out to the CFPB. I don't know what's happening in that space. That is a tricky piece, but Kate, I would love to hear your thoughts as to
Anytime we use acronyms, let's try to
Consumer
unacronym.
Financial Protection Bureau.
Oh, well, that's interesting right now. Got it. Okay.
So this is, anytime you're working with a mortgage company or really any financial institution and you're not getting answers or you're not getting responses, or the answers that you're getting are really unclear, that's a place where a counselor can be a big help. So first off, we can explain if they're using kind of bankers or financial language and it's really unclear, we can explain what that is and what that means. We can go over your situation and help figure out, like, here are the things that we think they should be offering you. And then we'll get on the phone with your mortgage company right alongside you. And there is a special magic when they hear that it's a HUD certified counselor calling on a recorded line, because they know that not only is that a person who knows exactly what they're talking about, but then it's a recorded line. So whatever they say is going to stick around, right? And we can pass it to Fannie Mae or to whomever we need to if things go wrong. Suddenly things just come unstuck, we find. So that's a great place to reach out to a counselor and really use this as a tool.
Thank you. So let's talk about public adjusters. That's a really common topic immediately after the fire. So maybe Valerie, you want to speak to some advice on working with a public adjuster or working directly with the insurance company?
Yeah, we would always recommend you negotiate what you can first, because when you're hiring professional help, whatever funds that come in during the time of your contract, they're going to receive a percentage of that. So especially if you're worried about being underinsured, you want to maximize what you can obtain on your own. And then if you're hiring professional help, if you go to the website, uphelp.org, and you just Google questions to ask when hiring a public adjuster, that it'll give you a tip sheet on how to navigate that. And just like with anyone else, be it the contractor that you're hiring to rebuild, any of those things, you want to do your due diligence. You want to vet them. The State Department of Insurance has some guidance on their website and also a way to check their credentialing. And there was a bulletin that laid out the expectations of what they're expected to know in the state of California, because as was mentioned earlier, a lot of times they're not from here. And so while they should know the laws in California, sometimes they're going to go to that muscle memory and default to Texas or wherever they're from. And so, you also need to know your insurance consumer rights so that you can advocate for yourself. As far as navigating that, there are some associations at the national level and at the state level that all of the people who are members of that assign a code of ethics that they're going to behave in a certain way. And so when you start looking, do start with those professionals that at least adhere to those national standards. ask for references and check that out. But again, try to maximize what you can on your own, so that you have as much of your dollars as possible when you need them.
Thank you. I would like to add, just anecdotally from our community, I saw people who hired an adjuster immediately and then found that their insurance actually worked really well with them and paid a lot, and they had to give part of that to the adjuster when they really didn't need their services because they were contracted with them. And then we had other people that went, well into a year before they decided to hire a public adjuster because they had come to some points that they knew they weren't getting any resolution on with their insurance companies. And that was the right time to do that. So similar to what Jennifer said at the beginning, it isn't something you have to rush to decide to do. So if you're feeling that, it's okay to just slow down a bit and explore, what you think it's going to look like.
We'd also like to remind you that you do not have to rush to hire an attorney. You are being swarmed right now by class action attorneys. Some are good and many are not. And they are scooping them up without a lot of regard for what they can actually handle in the way of client services. And you just really want to do your due diligence with, ask them, how much are you charging? Because we've seen them as low as 18%, somehow as high as 45% in the campfire. A woman called me who was her truck got hit during her evacuation from Paradise. She had hospital bills, and then her attorneys, once they paid themselves 45% and then paid her medical bills, they told her there was nothing left for her. So we've also seen huge variations of how much people get according to, if it's not if it's not in a fire victim's trust, especially, there's giant variations in what they get. So we highly suggest you try to visit Facebook groups, just talk to other or ask other fire survivors what they did. And remember that the fire victims trust, what we had in Sonoma County and in Paradise, is not the same. That was a structured settlement as a result of PG&E's bankruptcy. You may have that too. And there's just a variety of ways to go about it, but you do not have to decide today to join a suit. We're not saying don't. We're just saying don't feel like it's under pressure. And if you don't rush in right now, that you are out, because that's just not true. That's part of slowing down to make good financial decisions for your family in a place that's more peaceful for you.
I wanted to share, it was almost a year after our fire before we had the results from what the cause of the fire was. And it was another year later before I signed on to any litigation. So there's time to do this. I think that it's tough in the beginning because, of course, everyone's afraid and there's limited resources, and these things can kind of speed up the desire to do something. But in this case, I did a lot of homework on the attorneys, and I wanted to make sure they had experience in this work because there were so many showing up at our events, and we really didn't know, upon meeting people what their backgrounds were. So that's definitely one you can take some time to learn more about.
And they tend to be super warm and fuzzy, and then and it's all caring and loving. And then once they get you, there's a whole swath of them that will basically try to never return your calls again. So you really just need to make sure that you're doing your due diligence. And some of those are very experienced in wildfire claims, which is why going to people like Jen, going to people who've actually gone through the litigation process and just asking their opinion, you're going to make your own decision, but add that to your bank of information so that you're not, so that they, can't do you wrong in the way that we've seen. It's painful.
Yeah. So there's a few questions specifically on rebuilding. So I'm going to get to those now. So don't worry if you're not there yet and you're not thinking about those things yet. That's okay. In our community, we had a builders expo that we put together by locals, and that didn't happen until 6 to 9 months after our fire. I can't even remember, but it was quite a while after the fire before we were even really talking to builders about what it was going to look like. But some people are already thinking about these things. So one of the questions is, how do you navigate the financial decision of going for a speedier 110% rebuild versus maximizing your lot? I I don't know exactly, I'm assuming those are just two competing approaches, but I don't know
Um,
exactly what that means.
Yeah, so with with the tax assessor, they'll be able to increase it another 10%. And so you'll keep your tax basis basically. And so it really you're doing that long-term math. What does your financial future look like? And sometimes when I had a friend who in '07 who was severely underinsured, and she maxed out with an SBA loan and everything else. They built the biggest house they could, and they recouped their money when they sold it 12 years later, right? And moved to their next thing. But it was a crunch financially to do that, but it was a gamble they made, right, on maximizing that lot. A lot of it's just where you are in the process. Are you looking at putting kids in college? Or how far are you out from retirement? Your earning potential. You're going to be able to carry that note if you're going to maximize your lot. And Kate's nodding her head, and I'm going to be quiet now.
No,
Go,
I
Kate.
agree with everything you said. It is absolutely a balance, and something that, I think is going to vary person by person, right? Um, I mean, my first advice is talk to a counselor. We can help you make the decision and help you look at what your future realistically will look like. But kind of my second piece of advice is that, there is there's, I think, a tendency to try and kind of use every resource you have, right? Take the maximum loan, take the, build to the highest amount, right? Um, and that leaves you with the biggest payment and the kind of the most financial strain afterwards. And I know that there's a like that is there's a siren call for that for folks, right? Um, but I would encourage you to avoid that, to really think about, like, is this payment going to be comfortable to make? Because it's going to be a long-term commitment, and it changes the decisions that you get to make in the future. So really think about trying to make a payment that you're very comfortable with, not to rebuild to kind of the maximum amount, would be my advice in general.
Thank you.
And a lot of times people will flip it to they had a two-story, and when you're talking about maximizing your lot, it might be that they're looking at, I want to age in place, so I'm gonna take more of the land, but I'm gonna do that ranch with my accessibility because this is where I want to stay.
We saw a lot of that. We've got typical like two-story suburban HOA, and then now we've got a lot of ranch homes because these were people in midlife that decided to reinvest in the property, but flatten the flatten the square footage. Do we know? And I'm not sure who could speak to this, but I know it was being discussed about the content coverage, and it was recommended for them to pay it out 100%. Do we have any updates on whether there's been a decision made on?
Well, there's no decision to
Okay.
be made, except the individual insurers will make a decision if they're complying. And the Department of Insurance will post that on their website. It's kind of politely shaming. Don't you want to see your name here? But for the most part, it's hard to get. If you've got extenuating circumstances, you've got a child with access and functional needs, you're taking care of an older parent with health considerations, those are the special circumstances that you can ask for accommodation if they're not willing to give that to you, and see if you can get it that way. And I will say, always with your insurance company, documenting who you talk to, keep that claim journal. But the other thing is, if the person you're speaking to says no, it might be quite simply, they don't have the authority to say yes. So go up that chain of command and see if you can get to that manager, that supervisor that can say yes.
That's good advice. Sometimes a different person will give you a different answer, and maybe worth trying. You made me think of something on the shaming part of it. Is our insurance commissioner, when the people's ALE started to approach the first round of ALE running out, there was a big press from the state level for the insurance companies to extend that, and many of them did. And that's not a guarantee, and it doesn't create any runway for people, but I do expect those same conversations are going to come to head when there starts to be pivot points of things ending. And so hopefully there's something like that to extend that. One of the other questions was, if you have an extended dwelling coverage and you decide not to build, can you get that money, or just
Yeah.
coverage A?
Third-
But yeah,
third
can you
time's a-
pull that money out?
Yeah, third time is a charm. They passed this in 2003, so you could buy a replacement home in 2007. It did not work very well. Tubbs Fire did it again for us, and then we still had to do it again this last time. So the statute is very clear. However, if you're dealing with an out-of-state adjuster, they may not be able to understand the concept, because it's not common except in, I believe Oregon and Colorado are the only two states that even talk about this right now. In the chat, there's the link with the specific information. And so let me just say unequivocally, the answer is yes.
Thanks. So the next, oh, go
And
ahead, Jen.
sorry, can I just flag that a lot of those resources come from United Policyholders, which is who Valerie came to us from, and they are really the most trusted nonprofit around the issues of insurance and helping you navigate. They help insured losses. If you're not insured, they're not for you, but for everybody that is insured, we absolutely highly recommend them, and definitely take a look at all of their materials and turn to them.
I want to recommend them as well. They have so much content that's there for when you're ready for it, because so many people are going to approach this in different time frames. And it's just, I heard so many stories of people being, up late or early in the morning and just scouring that website for videos or content that they wanted to process because they were finally ready to just absorb the information. So it's like a nice library that's just there for you when you're ready. Yeah, it's fantastic. So the next question is on resources available for financing if insurance isn't going to cover the rebuild that you want. And I know that's a subjective question, but do you have any recommendations on other resources that might be able to support it looking like the final product that somebody wants?
Let's go to Kate.
Yeah, so there are a lot of different resources out there. I think the biggest challenge is figuring out which one's the right one for you. And so I don't want to tell people, here, do this or do that, because it really is going to vary person by person. And that's a decision that the counselor can help you make, but it's also going to depend on a lot of things about your current financial reality, right? They're often going to depend on your credit score. They're going to depend on your income, right? Everything's a little bit different. But there are absolutely resources out there, and there are also resources that don't include necessarily having to borrow, depending on your financial situation. So talking to a counselor, we can help you figure out which ones are right for you.
And then Valerie, do you want to speak to that as well?
Yes, well, one of the first is just looking at, we talked about earlier, contents, and that is one of the few unencumbered expense categories that you have in your insurance that you could apply, and that's what a lot of disaster survivors do, quite just to be very transparent. That's what people do a lot of the time. There's the SBA loan. If you're able to do that, it's a very low interest rate. And so it's a way to maximize dollars if you've got that goal. But going back to what Kate said earlier, it's really figuring out what you can afford. Don't personally recommend you touch your retirement savings. And we know that disasters allow you to do a withdrawal, but really you need to be looking at this from that lens of where you are and what you're trying to accomplish in your long-term financial future to set yourself up for success. And for some folks, it might be that you're not rebuilding. It might be that you're looking at buying. And if you're looking at buying, be aware that it might not be one house. You can buy multiple properties with the IRS disaster declaration. So taxes are complicated. There will be a webinar on that by United Policyholders. I just taught one on it last week. Don't want to talk about that piece, but there are some ways to take advantage of that in the tax calculations to be able to help you justify some of those expenses.
Valerie, if SBA turns you down, what do you do? Because it always happens a lot.
It does a lot, and part of it's just, where you are credit wise and how much debt you already have. If you are if your gap is significant, SBA turns you down, there are going to be partners in the what we call the VOAD space, voluntary organizations active in disaster. There's a long-term recovery group that will be standing up. There will be partners able to help with pieces and potentially volunteer rebuilds with a licensed contractor. That machine is putting itself together right now. The way to access a lot of these other resources to help you is going to be something called disaster case management. That they're at the disaster recovery centers. Go there, sign up for it. I think the sign says Catholic Charities of California. That's a state administrator. Sign up, because that's a way to access other dollars, grant opportunities that will be coming down the pipeline. There will be government programs hopefully coming online and to help with rebuilding as well. But you need to be in the communication loop to be able to access a lot of those.
I want to ask one of the questions that just came in. Are we truly required to submit all of our personal property items to insurance in 60 days if that's stated in your insurance policy? They're hearing mixed answers on that.
Not in 60 days. You have the link that we put in the chat earlier that says your insurance claim rules in California 2025 outlines what your legal rights are as an insurance consumer in the state. And so there are extensions because this is a disaster that you are eligible for. Again, this might just be an adjuster that is looking at the policy language and not paying attention to the laws that govern the state. So start with that. And the reality is that language in your policy does state that you have to enumerate those items and then replace them. So it's not just make a list, it's value it. They're going to depreciate it. They're only going to pay you for what that depreciated value is. And then when you replace items, then they give you that difference. And that's the way it's meant for a partial loss, a kitchen fire, right? It's not meant for a total loss. And that process is just very painful. And so, push back as you can, but unfortunately the policy language, that legal contract you signed when you bought your policy does state that 60 days is not valid though.
I want to add to that too for standing homes, when the adjuster comes and gives you a breakdown of the replacement cost for things, there's going to be depreciation on those as well. And I think that can really alarm people because they feel like they have to replace what was a $2,000 couch for $800. But when you go out and actually buy the couch and then you submit the receipts, they will reimburse you for the difference of the cost of that couch, like for like value. I mean, you can't go buy a massive upgrade, but I think sometimes people feel like they have to fit it into that depreciation cost, or they've got to cover the rest, and it's alarming at first. And so just know that will come. There's actually two questions about the standing homes after smoke damage. One of them is about how far can you push your insurance to remediate to your standard of personal health, to mitigate for your personal health concerns. And then the other one is about how do you determine the current value of the home after the proper remediation's been done. And so if we can first talk about the insurance side of how does that work for a standing home, and how do they advocate or advise for things to push for in that experience?
Valerie, you want to start again and then maybe kick it over to Kate? And if Sidra has anything to add?
Yeah, I'll start with, you've got two things. The insurance commissioner just put out a bulletin, I believe today, that called on the insurers to honor two things. The fact that Just because an evacuation order is over does not mean a home is habitable. And so they push for the extension of additional living expenses to cover that. The other is the reminder that Los Angeles County's Public Health Department has issued some guidance there that talks about what the hazards are and what the expectations are as far as cleaning. And so those two things are your friend to help you in negotiating that. Because it's not trivial to understand what needs to be done, as Jen said, especially if you're just taking your insurance company's guidance. The first question, quite honestly, is what are their qualifications? Are you an industrial hygienist? What do you know about this? Are you a remediation professional? If they don't have that and they're a desk adjuster, they have no basis to make that decision. This is you, your family, your belongings, what needs to happen. And so, advocating for yourself. I will say there's one caution to put into when you're hiring a professional to do the work. Your insurance company is generally going to pay for one line item of testing in your contract with whoever your provider is. You should probably consider asking for pre-testing and post-testing. Pre, so they know what to clean and how to clean, and post to prove that the work has been done satisfactorily. And sometimes insurance companies say they're not going to pay for that. And, you just have to look at that additional expense to say, is it worth it for me for the peace of mind? And a lot of people paid for it and then handled it through other donated funds they received later.
If I can make a plea with this too, that these, like, how are you supposed to track all of this while you're also doing the rest of your life? And so, like, daily, are you supposed to check this bulletin? This is another reason why organizing in your community and having a block captain and really like many hands, light work. A lot of the power of block captains in community organizing has to do with, making sure that you do rely on your community to actually flag these things for you, help you walk it home. And because otherwise, who would think like I should check every day on the bulletin to, find out the new rules of the day? Kate, did you want to add to that?
So yeah, Valerie really nailed it. I don't think I had there's a whole lot more I can add from what she said, but the only other thing I think I might say is to make sure that you just because your insurance gives you something, you don't have to take that as the final answer, right? People, and I'm sure you're all encountering this right now, right? But most folks' experience with insurance is sort of your car insurance, where something happens, they give you some kind of payout, and that's the end of the interaction. That's not the case with your homeowner's insurance. And so if they give you something that feels wrong, that doesn't seem right, then that's when to push back, right? If your gut says it's not right, if your neighbors are seeing something different, push, push, push.
Yeah, I would like to second that. I think in the smoke damage recovery, the sooner you become a strong advocate for yourself, where you shift the roles from the insurance just telling you what they're willing to do to you telling them what needs to happen in your home, that's going to change the conversation. And it doesn't feel natural at first because this is new territory and you don't know how to do this. But getting an industrial hygienist report is essentially the roadmap to your recovery. And once you have that, it's going to help you advocate a lot easier with the insurance company. I just want to give an example. The adjuster came, they walked through the house, they told us, this is what we think you need to do. And they immediately gave us like $40,000. And we were like, wow, they're taking this so seriously. And we were very ready for kind of a fight. We didn't know what it was going to look like. And we had a remediation company come for $35,000 and clean the whole house. And then we moved back in and we all got sick because it wasn't cleaned properly. And then we fought the insurance company to get an industrial hygienist. And then we moved out because they found toxins in the home. And the ultimate cost of the cleanup was almost $200,000. And so I need you to know that what they are going to offer will be the least expensive for them, and it may not be the right thing for your recovery. And the only way you can advocate what the right thing is for your recovery is if you have the data to show, here, there's a problem here, and we're going to fix this the right way. And for some people, you know, that was just cleaning. And for others, maybe like they have asthma in the family or they're sensitive to things. It required a lot more work for the home. And some people moved back in a few months, and some people were still remediating a year later. And so I want to give some examples of what that can look like. The other question was about value of your home. Like, how do you determine the value of your home after it's been cleaned properly? And I do want to say I'm a realtor also, and in our community, a huge part of the recovery and for homes maintaining value, we're documenting the recovery. So if you have a standing home, you need to have evidence of that it was cleaned properly. Or as a broker in my community, when people were looking to buy and a home was in the smoke area, if they didn't have documentation of remediating properly, I would advise my clients not even to look at that house. And so just some future reference for ensuring that you're doing things properly and you're documenting that. And another thing that happens is now my side of the street is the older homes, and now there's all new homes on the other side of the street. So in terms of estimating value, you know, it made our home come up a bit, but it's not nearly close. You know, it's probably a $500,000 away from the price of the new homes that were built across the street because they're larger, newer, efficiency. You know, there's a lot that comes with those. So I think it's difficult to give a current value because it's going to shift over the next year to 2 years in the recovery process.
Thanks, Jen. Do you want to go to the question on the older person making a finance? I mean, we can
Yes.
only tell you like scenarios. We obviously
Yeah.
can't give any direct financial advice, but did you want to ask that question?
Yeah. So the question was about what do you recommend for someone in their 80s whose home was appraised at approximately 2 million, but only had a $500,000 mortgage. So they're estimating the value is likely half of what it was before. So I think interpreting this question, it's, you know, how does somebody in that age range make a decision for financial recovery at this point? And interestingly, this came up in our mental health piece. This is, you know, this is showing up in all the areas of, depending on, you know, where you're at in your life, what is the financial choice to make? And for somebody who's in their 80s, that might be a different conversation. Who do we go to?
Let's start with Kate because she's off mute.
Okay, let's jump in here. So this is one that I really think that the answer to this is going to depend on, you know, family by family, right? Like it's going to be looking at what does the support system look like? What are their other options, right? What is their physical needs, right? Is it something that can be met easily by other housing options in the area, right? You know, I think this is something where it really takes sitting down with that person and with other people in their support network that are going to help make these kinds of decisions to figure out what's going to be the next best step. And so I'd say it's not a one size fits all, but I think this is a really perfect example of a case that's kind of slowing down is going to be in everyone's best interest. Because, you know, right now there are so many decisions to be made and so many things that are really pulling at you. It can be hard to give yourself that emotional space to make a long-term decision like this. And so giving yourself just a little bit of time, we find, makes a big difference in helping people kind of bring things back to center and really think about these kinds of really tough questions.
We also see a pretty wild difference in the price of lots pre and post cleanup. We see that the panic sales, right away. This is in every community, even the tiny ones like Greenville. It's really worth waiting as long as you can. If you can't, then that's your own, that's fine. Like have self-compassion the entire time and patience and grace with yourself and others. But if you can wait, and also talk to your neighbors if you feel comfortable doing that, because they too have a vested interest in you being there. And I had a great conversation with somebody from the Palisades yesterday talking about this very scenario and how much the neighbors wanted to ensure that, especially with the older generation living around them, how do we keep our elders? And what can we do in order to assist them? So they're also like the idea of walking yourself all the way home, especially if you are, you know, an 80-year-old, maybe a widow or a widower, it can feel very daunting to do that. But, and that's still, again, your decision if that's what you want to do. But maybe maybe give them the opportunity to know your situation, because they may very well want to actually help you on that path and be in community with you.
And as Jen said, knowing you're not alone and this, find someone to go along with the process, be it family, friends, a neighbor, you know, that will help you do that. In my fire, we had older couples who were in that situation, and the lot value was less at the beginning, and so they ended up rebuilding the home. They never moved back in the home. They ended up buying a replacement. Their temporary home ended up becoming their permanent home, but they needed the dollars from that home that was rebuilt to finance their long-term financial future. And so, you know, they stuck with it. They had folks from church and one of their adult children help manage the process with them, but they did rebuild the home. And then they were able to actually, at that point, to be able to sell it for maximum value, because the area that we lived in, there were no properties. So, you know, once the devastation of the fire was over, 2 years later, that was a very desirable property. And so the price had actually gone up significantly from what it was at that point.
That's actually a really good point. There, you know, a lot of the conversations, I've been interviewed a bunch about gentrification after wildfire, and what gets missed though in those conversations is that, especially in the places where there's a really strong community, we've seen this in Marshall Fire and Tubbs Fire, and what we see is the same people go home. About 80% of the same people do rebuild and go home, but their houses tend to be a little larger, and they are usually worth more money. I've never seen any community in all the communities I've been in become less expensive. Sometimes people look towards the case study of Paradise and like, well, that's just about, you know, a brand new community, but actually a lot of the same people, like maybe 4,000 or 5,000, did end up going home. But the people there were actually much, much, much older and had very few resources. So they have seen the greatest change of population that we've witnessed in any mega fire community so far. So that's not, so if people point that out to you, always remember that every fire has pre-existing conditions and cultures, and you have to, every time we walk into a fire, we always consider what was there before, what are the strengths, you know, what are some of the challenges, and anytime someone's speaking with authority, even in this group, to just add it to your bank of information. But make sure you know that your fire story has just begun. About 6 weeks ago, it just started. You know, and I know that it feels terrible, and I know you just want back what you had before the fire. And I get all of that, but just to let it unfold for you and really to see the strength of your community. One of the things we're most heartened by in this fire is in both the Eaton fire and the Pacific Palisades, we love how much people are in love with their communities, and all the community organizing and all of the determination to really work together and find ways to do that. I know you don't see that like throughout maybe that all of the entire landscape of fire recovery, but the community groups forming are really the most active that I've ever seen in any community. And we were very active, and Jen's community was super active. So I just want to really encourage you to, more than believing what you read, believe what you're seeing from your neighbors and hearing from your faith-based communities like KI, and take a minute for sure. You are doing a good job. It may not feel like it. It may feel hopeless and like it's a mess, but it's not that way. It's not, your fire story is not written at all. And you just got here, and people like Jen and Valerie and Kate and Sidra and everyone who comes with us, we want to help walk you home. But we do that in support of your community, and we really are very heartened and touched by what a wonderful community you have. So, Jen, is there a final question?
Yeah, there's a couple more, but I think this one I think is pretty quick answer. So if your insurance comes up with an estimate to rebuild and you have a contractor who's estimating higher, Do you need to, what do you do in that situation?
So they're providing you a scope of loss, basically is what it is. And then you're coming back with an actual bid. So the point is you're negotiating with them, right? They're saying our formula spit out this dollar amount. You're saying this is what a real builder with real materials at today's pricing, where I live is going to charge me. And so you're negotiating with them to get to that. Just be aware that, they're only going to owe you up to policy limits with your extensions and your ordinance and law and whatever those other dwelling specific coverages are. So getting them above that involves different issues, and that would have to be most likely an error in underwriting or something else. So negotiating with them to make sure that you maximize that insurance is very key, but it's not going to turn loose floodgates over the policy limits.
Was there one last quick question, Jen, or should we go to final thoughts and turn it back over to Adam?
There is one more. We'll see how quickly this goes. So you all might be aware that they've decided in the debris cleanup to do the 6 inches of removal of the topsoil. And there's been pushback from various groups on that. And so the question is, if that stays how it is, should they be trying to pay for it themselves? And I'm adding this on myself, but is there somewhere in coverage that could cover cost for something like that they should be looking for? Because I think a lot of people are concerned about that.
Valerie?
Yeah, I mean, you can certainly ask your insurer about it to see if that would be part of your debris removal, to have that validation. It may or may not, depending on your adjuster and that insurance company, what they'll do. I know from Maui fires that the coverage, they did do soils testing, FEMA did. Part of the rationale behind that is they did not have historical data on Maui for fires. And so without that baseline of what the soil looks like in California after, and what the hazards were, they made that decision to do that. That doesn't necessarily obligate them to do it in the future. But I think we've all seen enough information in the news to be very concerned. So knowing what that might be, what it might cost, can you, Jen, I'm thinking about the Tubbs fire. One of the things that survivors did there that was very practical was, you found 30 people who needed something done. And so you bring that expert and you're like, okay, here, you don't have to go looking for work. Can you bring that cost down and make it work? And so, if you're looking at absorbing that cost, because it's important to you, at least figuring out a way to make that more affordable in case it's on your dime.
Remember that bulk buying applies to services as well. We've seen that in surveying. We've seen that in a number of different ways, and we can highly recommend that. I'm about to turn it back over to Adam. I just want to make sure, Sidra, did you have any final thoughts?
Thanks, Jen. I would just say, this is a marathon. I mean, I know, Jennifer, you've said this many, many times. It is not a sprint. This is, as much as people would love to be home in 6 months, that is not most likely going to happen. And so just be graceful with yourself. Take advantage of the resources out there.
Thank you. Kate?
Just a little bit to echo what Sidra's saying, you're making the best decisions that you can in the moment. We see a lot of people who, as they go forward, they look backwards, they wish they had made a different decision, they kind of beat themselves up. Don't let yourself get into that position. Remember that you made the best decision that you could with the resources that you had available, and to stay very focused on the future and in getting there in your own time.
I love that. Valerie?
So I'm going to piggyback with that a bit. So it's really hard with everyone wanting to help you, but do take advantage of those friends and family members that offer to help. Give them that concrete thing to do. And think about some of the many thankless jobs you've inherited. If you're looking at hiring professional help, ask them to go do that vetting for you and then give you the homework, right? Give somebody something that takes brain power away from you and have them do it because they don't have the fire fog. They're not in that same headspace. And they only have their normal life and some assisting to do, not the 30 new jobs you've inherited.
I love that. Jen?
I would just say, especially if you're watching this tonight, we just gave you so much information. So when you get off this call, if there's any way that you can just put it down and take a breath and know that it'll all be there in the morning and you can get some rest and attack some of these things tomorrow, and that we are not going anywhere. Like, our information feels urgent now, but we're going to be right there, and we'll keep coming back and giving you whatever it is that you need. But tonight, personal challenge, just put it down and take a break.
I love that, Jen. That's all such good advice. And I just want to tell you that, we've stood in a lot of communities and we know the feeling of seeing it all gone, and it feels so daunting and impossible. But, you can recover, you can rebuild, you can reimagine. These things are doable. We look at your fire as it's doable. It's terrible. We're really sorry it happened, but we do believe that you can and will recover and rebuild. So thank you for having us. Adam?
Well, thank you so much, Jennifer, and I want to thank all of our panelists for being here tonight. We're incredibly grateful for your time and lending your expertise. I know Sidra is in the Eastern time zone, and so thanks for staying up late with us. I also want to say a special thank you to After the Fire, who have been nothing short of superheroes during this time. Well, superheroes aren't real. They're better than superheroes because they're real. So I'll say that. I see a lot of familiar faces, or a lot of familiar names on our attendee list. I hope to see many of you this Friday night at our Disney-themed Shabbat at the Caton's Children's Museum in Santa Monica, which starts at 6:30. And one more time, ourki.org/pallyfire, and also afterthefireusa.org for all sorts of information. So thanks very much, everybody, and have a good rest of your evening.